welcome. You're watching Commodities First, Dhantaras special on ETNOW. Thanks very much for joining us. I'm Ajay Sharma. On this auspicious occasion of Dhantaras, we bring you a special edition on precious commodities like gold and silver. Dhantaras, which is also known as Dhantaras, marks the first day of the 5-day Diwali festivities here in India. Today, most families purchase gold, silver. Some of them even go out and buy household utensils, as they believe that it'll bring prosperity and good luck. But here on the show, we get you an amazing panel of guests to help you with your investments in precious metal. To give us a global perspective, we will be joined by Ross Norman at Sharps Pixley from London. Soma Sundaram from World Gold Council will talk to us about the demand and trends which he's observing, consumption trends. Kunal Shah will talk about trading and investment strategies from Nirmal Bang. And Rajiv Popli is also here to tell us how things are on ground, along with, of course, how the sales are panning out. And Rakesh Sharma from SLG Jewellers in Delhi. They're also large players in that region. And from on ground, our two colleagues, Mubina Kapasi and Ruchi from Delhi, will tell us how things are. Ladies, let me start the show with you. Mubina, you go first. How are things panning out there at the showroom?
Well, it's a very special edition of Hot Commodities, and we at ETNOW are here at the P.N. Gadgil showroom located at Vile Parle in Mumbai to understand exactly what customers are buying, how much are they willing to spend, and more importantly, how much more are they willing to spend from last Dhantaras. So let's just start up with some of the customers here at the showroom. Ma'am, just a couple of questions. Well, firstly, what are you buying?
I'm buying a Lakshmi Har, I suppose.
Oh, that looks lovely. And what is the purpose for this purchase? Are you looking at it as an investment, or you are going to use it as an ornamental purpose?
My daughter's wedding, so that's why I'm just for an investment for her.
What are you buying today?
My son here, Sean, is getting married. So
that's lovely. Congratulations.
So I decided to buy myself a diamond set. So
oh, so the son's getting married, but the mother buys herself a set.
I should immediately.
So I guess it seems like in India, traditional heirloom is something that is always going to be jewelry, and it's an irreplaceable asset for most of the Indians.
Much for that, Mubina. We'll definitely keep coming back to you to talk more about the trends on ground. But that was a Mumbai flavor. Let's also get you a flavor in Delhi. Ruchi, how are things panning out in Delhi?
As you can see behind me, it's a packed house here at SLG Jewellers in Delhi, and as we know, it's the auspicious occasion of Dhantaras. The love for gold and silver is undying, but platinum and diamond is also the preferred choice this time around. Coins and bars are seeing few takers, but people are mostly focused on wearable jewelry, small stuff like earrings, bangles, gold chains, and stuff mostly that is easy on the pocket that people can wear on a daily basis is where the trend really lies this time around. Apart from that, as far as the prices are concerned, gold prices were depressed in the last 3 months, and going from here on, people are expecting some sort of an uptick post Diwali, also because the wedding season will come, so people are expecting that gold prices in the next 1 year could go up to 33,000 rupees. As far as silver is concerned, there is an expectation that apart from the volatile prices that we've seen in the last 1 year, silver prices will go up to between 50 to 55,000, but in the next 1 year. And jewelers here are clearly not complaining. They're saying they're going to make the most out of this, and they're expecting that by the day ends, they will see at least a 15 to 20% jump in their sales because of this Dhantaras. There is more money in the hands of people, more consumption of gold, and jewelers are very happy, and clearly a very happy Dhantaras for all the jewelers out there.
Right. All right. So now that we have established the trend that both Mumbai and Delhi markets are witnessing hectic buying today, let's get you a global voice then. Ross Norman, CEO of Sharps Pixley, joins us to talk to us about the broad trends he's observing on the global front for gold. Ross, thanks a lot for your time talking to us on this auspicious occasion. India, as you know, is a big consumer of gold. What would you like to share your insights on pricing from here on? It's already done very well this year, 25% higher for people who are watching the show.
Yes, indeed. And I have to say, even though we're here in London, there's fantastic buying here in London to celebrate the auspicious day of Dhantaras in London, because as you all know, London also has a very large and wealthy Indian population here. But going back to your original question, Indian demand's been interesting this year. It's roughly half what we've seen in recent years. In actual fact, it's the lowest for close to 20 years. You might then ask, why is gold then up to such a significant amount? The short answer is that where Indian demand has been weaker, there has been strong buying, particularly in the West. German buyers are seeing demand roughly a third up on previous years. Of course, what is now the world's biggest buyer, China, has also seen increases. So although it's been a poor year for Indian domestic demand, the gap has been made up, and more so, by buying elsewhere, as I say, China, in Europe as well. So that's quite encouraging.
Ross, that's very nice of you to have acknowledged our festival and also your observations of how Indians are buying gold in London as well. But many of the Indians here have started, assuring or allocating a fixed amount of their portfolio towards gold. Up till now, the big demand was only consumption and jewelry demand. What would you like to tell them, with the 25% rise already, do you see over a medium to longer term, given the environment, further gains being made in the precious metals?
Well, I think the outlook is extremely optimistic. I mean, gold is still close to 40% below its all-time highs back in 2011. So there's clearly upside potential here. What we're expecting from our side is, looking ahead to next year and years beyond, is a significant rise in inflation, certainly across Europe. And this will inspire people to buy hard assets, including gold, and it will also benefit the borrowers, if you like, as well. So the outlook for gold looks very, very promising. And I might add to that, there is an increasing concern, if you like, particularly in Europe, about the darkening macroeconomic environment. And in that environment, gold, of course, performs very well as a safe haven asset. So gold is doing what it should do. It's protecting people as a long-term store of value, and it protects them in a period of inflation. And I think that's why we're seeing very, very good buying here in Europe.
Fair point, fair point. Let's go to Kunal now. In this backdrop, Kunal, what are your thoughts? Before the show, we were talking about how even you remain constructive. Talk to us about the near to medium term view and what's the rationale there?
Well, we believe that one should remain invested in gold. The matter of fact is, like Ross just pointed out, the inflation is likely to pick up. If you look at today's US GDP number itself, 2.9% GDP versus 2.5%. This is a clear sign of developed economies have started to heat up. So UK, US, all these economies have started to heat up. So on one hand, we look at the Indian slag demand and we say, okay, should we buy gold or not? And on another hand, we have these macro developments which makes me believe that irrespective of any target in my mind, I recommend the investors who are watching our show, they must remain invested in gold. These are the very uncertain times, and now with inflation coming back, the hedge against inflation play will also come back next year. So irrespective of the fact that US 10-year bond yield goes up to 2% or 2.05 next year, even in that scenario, gold should do well. Generally speaking, gold and US 10-year bond yields are negatively correlated, but I believe that even if US bond yield keeps moving up to the extent to 2.05, gold should not go below $12.25, $12.30. And on the upside, you never know, next year you may see $13.50, $13.80 back again on CME.
Fair point. That was the investment take. Both our global expert and Kunal believe that upside momentum may continue. But let me get in Rajiv Popli from Popli & Sons from the heart of Bandra. Rajiv, thanks a lot for joining us on the show. Happy Dhanteras. How is the activity at your showroom? Clearly, the location indicates that the well-heeled of Mumbai must be pouring in. How's the investment and consumption demand trends?
It's been hustling since morning. We've been here since 9 in the morning, and we hope to do midnight shopping today. So it's looking pleasant, and the optimism in gold is ever increasing now. With a good appreciation in the gold price that the Indian consumers have got, they're pretty optimistic on their shopping. So that's a good sign for us end of the day, and it was long awaited from the jewelers point of view because we had a lot of postponement of purchase in the past few months being seen, and we're seeing them closing on for Diwali now.
Let's also get in World Gold Council's view coming in. They look at demand consumption trends very closely. Mr. Somasundaram, how are you looking at the demand and the consumption trends? The data seem to be suggesting that the first 6 months demand has pummeled as far as gold goes.
Well, at the outset I want to say that there is no consumption base at all. All gold is investment. The forms may change, and if you ask anybody who takes a loan against a jewelry, they will probably clarify this better than I do. But yes, I understand the question is the form of gold, whether it is jewelry or bars and coins. India is a jewelry market largely, with about 25% in bars and coins, and that has continued for a while. But yes, Dhantaras is a very special occasion where people probably relatively would like to make even token purchases of coins. So to that extent, coins probably carry a little more importance. But as we see it, yes, there is a lot more optimism. There is a positive sentiment that has come back after a difficult first half.
Right. Let's get in Amar Ramani of IIFL Wealth on the show. Amar, you guys at IIFL Wealth have done a very exhaustive research on making a case, the hypothesis that gold prices are actually heading higher. A kind of a stealth bull market is already on, and perhaps reaching $2,000 an ounce as well is not ruled out in the medium term. What's the rationale you are building for that kind of a target?
You know, as a target price of gold, there is no valuation model really with which you can arrive as a target price for gold. So the $2,000 that we mentioned is something which is based on obviously intuition and the way you see demand and supply panning out over the next year or two, and also how the globe is faring. And demand on gold is an important parameter, both physical and what happens to ETF and other points. We've also reached this target price based on wave theory, based on what the charts are telling you. So it's more like a guide. But what is important is for an investor not to be so swayed by this $2,000 figure, but invest in gold for the right reasons. If you're buying gold for trading reasons, thinking that it's going to become $2,000 in a few months, then I think that would be a wrong approach. The right reason for buying gold in your portfolio would be two. One, of course, that it is a great asset allocation decision.
Amar, as some of our other panelists were also alluding to how macro indicators, particularly on the global side, are also impacting gold prices. How do you think Fed hiking rates would impact the prices, or some other reasons which could actually drive your long gold view in a much more stronger fashion?
So as far as Fed raising rates is concerned, obviously we've seen some impact on gold prices in the last couple of months, and I think that partly, if not completely, would be because of this overhang of Fed rate decision. But I think it's largely in the price. And if you go back to what had happened in 2015, after Fed had raised its interest rates, gold had started outperforming again. So for a brief while the rally had paused, post which we see about 20-25% kind of rise in 2016. So I think the Fed event is not such a big risk. Coming to factors why we like gold, clearly one biggest factor is the extent to which interest rates are low globally. We in fact are in a situation where $10 trillion of bonds are in negative yielding interest rates. So what this means in percentage terms is that about 40% of the global sovereign bonds in developed countries are trading in negative yields.
Mr. Sharma, tell us what kind of trends are you witnessing in Delhi? Because since gold prices have gone up, is demand likely to get impacted in the positive side, or are more and more people coming in and buying because it's usually people chase rally as far as this particular precious metal goes?
Yeah, I feel that is a positive sign, because last year who purchased, he is getting more. So there is 4,000 per 10 gram increase in comparison to last year. So it is a clear signal that if I invest in gold today, then I can expect some increase also. So I take it as positive.
Rajiv, break down the sales which you are witnessing last 2-3 days, or estimates of next couple of days. How much is purely jewelry based for consumption, and what kind of investment demand is setting in?
See, jewelry on the whole has always been a security subject, though there has been adornment situation, so that's where jewelry actually comes in. But back of the mind, it's always security of the future, as an investment. So jewelry consumption per se has been around 85 to 90%, and 10% has been the bullion coins, which is the normal scenario we see during these times, and that's steady at this time too. We're happy that there is a good concentration on jewelry more than the coins. That's our core bread and butter business.
Right. Kunal, at Nirmal Bang, how are you recommending your clients who have more trading view on precious metals? What kind of strategies or price levels should they watch out for making long positions? Where should they square off or short? Overall, you were just talking about that you are a bullish view on gold, so it's buy on dips, isn't it?
Yes, we recommend our clients to hold 5 to 8% of their total wealth in gold, and I believe that gold prices can definitely move up. So the price levels to watch out for is, we believe that gold should not go below $1,200 going forward. $1,225, $1,230 great levels to go long in gold. And on MCX, we believe that if somebody is going long in gold, I think 29,500, 600 good levels to initiate a long position. And by next year, by next Diwali, the likelihood of gold again testing back 31,000, 31,200 kind of levels looks very, very likely. So buy at dips. Price target is immaterial. I think it's the value of gold in such kind of environment is increasing every day, and now with the again prices going down, we expect the Indian love demand, the jewelry demand to again pick up in the market. So strong investment demand, central banks buying gold, diversification of portfolio, and combined with all of these, lot of uncertainty in global economy. So I think we are recommending our clients and the viewers to hold gold. Don't have a target of whether it will be 35, 32, 33. It's very difficult. Like the previous panelist just said in an interview, that it's very to predict gold prices by any model is very difficult. So for me, it's saying that it will be $1,400 or $1,350 doesn't make sense. But the message which is clear is that one should own gold. 5 to 8% of the total portfolio should be in gold in such environment.
IIFL Private Wealth, what are you recommending your clients? What kind of percentage should be held in gold for your HNI clients?
So again, there are many studies which are done, but there is no conclusive evidence as to what percentage of your holding should be in gold. In case of Indians, we hold a lot of physical gold as well. So then that decision gets a lot tougher. But I think a general guide or thumb rule is that between 5 to 15% of your portfolio allocation should be in gold. So I think that is the number that investors should stick with. And the more aggressive your investment profile, the more gold you need to own, because that much more risk is what needs to be curtailed in your portfolio.
Mr. Somasakar, we actually saw almost 59% drop in the gold imports in the first 6 months of this year. What's your outlook on the demand from here on? What kind of number are we talking about?
Yeah, the first half of the calendar year has been a challenging part. There's no doubt about it. Against last year, demand of 352 tons, we ended up with 248. There are several factors: the rise in price, the jeweler strike. Many things did affect the demand. So this year is going to be lower than last year. as a calendar year. I think Q4 will be a good quarter, but yet on a full year basis, we will see demand at the lower end of 750 to 850, which is the estimate we have at the moment. It should be at the lower end of that range.
Rakesh, in Delhi, at your outlet, what kind of buying is happening? What price range are people usually buying right now? Because the prices have gone up, are they adjusting their purchases lower?
Basically, there are two types of buyings during festive season, including today. One is for wearing purpose, second is for wedding purpose. So they are mixed type of purchases. People are purchasing, customers are purchasing around 30,000, 50,000 items also for wearing purpose, whereas they are purchasing heavy bangles, heavy sets in the range of 2 lakhs, 3 lakhs, 4 lakhs and 2.5 lakhs, like that. So there is a mixed trade.
Amar, India has a long history of holding gold in physical assets, and some of our friends from the jewelry community have been alluding to that. But where does gold ETF come into the picture? Because at least the data, this evening's data shows that globally also SPDR holdings is witnessing a lot of money moving out in favor of gold ETFs. So though people want to have exposure to gold, they want to hold gold in physical, not in physical format, but in paper format. What are your thoughts there?
So I think gold ETFs is a fantastic concept which has come up over the years, and we are seeing increasingly a lot of money being channelized into gold through this route. The government also wants ETFs and gold bonds to be the preferred medium of investment rather than physical gold, and I think they've been decently successful. In fact, it also makes sense to hold ETFs today, not just because you don't have to physically store that gold anymore, but also now with the government's gold bond scheme, you earn an interest also on the holding that you have, which unlike in case of physical, obviously, is something that you don't get. So I think ETFs are a great way of investing in gold. The government's gold bond scheme is a fantastic way where you earn interest to invest in gold.
Thanks very much for that. In fact, with that, we've come to the end of the show. Hope you benefited from all the perspectives shared by all our friends and experts, and you will be able to make a strategy of your own, how much portfolio allocation should come in favor of precious metals. Meanwhile, let's also check out some of the other outlets on Dhantaras in Delhi, what kind of activity is going on there.
दोनों ही पर्पस है, एक तो इन्वेस्टमेंट भी होता है, वो तो बेसिकली है ही है, और दूसरा धनतेरस है, आज वो फैमिली के लिए अच्छा होता है खरीदना.
आज धनतेरस है, इसलिए आज फाइंड आउट करती जा रही है.
गोल्ड तो ऑलरेडी फ्यूचर हाई पे है, मतलब पास्ट हाई पे है गोल्ड तो गोल्ड तो मैं एक्सपेक्ट ही नहीं करती कि हाई जाए. और
With that, it's a wrap on this special edition of Commodities First. Thanks very much for watching.